am going. I was supposed to tackle statement of financial position. Statement of financial position is also called or referred to as the balance sheet. And we want to see how we can prepare a balance sheet of a company, the format of preparing a balance sheet. We've mentioned that a balance sheet is also called statement of financial position. And these are one of the statements that are audited by various bodies or by the government, so to say, government auditors. So we want to prepare, we want to look at the format of a balance sheet. A very important statement. Without any further ado, I would like us to look at our question here. This information that we've been provided with, and I'll read it for us. The following balances were extracted from the books of Good Life Limited, Kenya on 31st December 2015. We have item, then we have Kenya shillings, the second column. We have land and buildings, 650,000. Stock, 470,000. Bank overdraft, 80,000. Debtors, 35,000. Debtors is also referred to as accounts receivables. This one, those of us who are in institutions of higher learning, we refer to it as accounts receivables. 10-year bank loan, 240,000. Creditors, also referred to as accounts payable. Accounts payables. 240,000. We have cash, 50,000. Motor van, 150,000. Then capital, we've not been provided with, so capital we don't have, and as far as our information is concerned. We have stationery, 250,000. We have furniture, 50,000, and lastly, 1-year bank loan, 280,000. This is our question. We are required to determine capital. And part B is that we prepare Good Life Limited balance sheet as at 31st December 2015. Before we prepare it, I would like us to go through its format. Let's look at the format of a balance sheet. A balance sheet also takes a T format, but there is no indication of a CR or a DR side. I shall repeat. A balance sheet takes a T format. It takes a T format, but no CR or DR indicated on the statement. Let's look at the format of a balance sheet. It has a name of the business, We have, we've said that it takes a T format. It takes a T format. T format. We have name of the business. We have Good Life Limited. Then the name of the statement, balance sheet. Then the time, the date of preparation, the date at which we are preparing it, as at 31st December 2015. machine, it doesn't have a CR or DR side indicated. It doesn't have a CR or DR side indicated. So, it has too many columns. Kenya shillings, Kenya shillings. Then on the other side, again, we are having too many columns. Then we are going to list all the assets on this side, then capital plus liability on this side. Why are we doing this? I will take you through an important concept we call the bookkeeping equation. The bookkeeping equation or accounting equation states that assets, I would like that you understand the reason why it has a T format. Assets on the other side should equal capital plus liabilities. Assets denoted by A, capital C, liabilities L. Assets equals to capital plus liabilities. This is what we call the accounting equation or bookkeeping equation. Bookkeeping equation or accounting equation says that assets equals capital plus liabilities. What are the assets? Assets are what the business own. What the business own are what we refer to as assets. Examples of assets: we have cash, a bank, we have furniture, we have machinery, we have motor vehicle. Those are examples of assets. Let's say examples, e.g. Building, motor vehicle, cash, we have bank. Those are just few examples of assets. Then capital is owner's claim. It is also referred to as, we have owner's equity. In institutions of higher learning, it's called owner's equity. Capital is what is owner's claim. Owner's claim is what we refer to as capital. Then we have liabilities, are what the business owe. What the business owe. Owings. Let's say owings. What the business owe. Capital is owner's claim. Liabilities is what the business owe, or owings. What the business owes other people or other companies. This, we'll say that what we own. After the knowledge of the bookkeeping equation, the bookkeeping equation says that all assets must equal capital plus liabilities. It means that when we are listing, when we are preparing this statement, both sides must balance. It must balance. It must balance for it to be in conformity with the accounting equation, because the accounting equation or the bookkeeping equation requires it to balance both sides. So let us prepare our Good Life Limited balance sheet after the knowledge that we've acquired, the bookkeeping equation. Let's now prepare our balance sheet. Let's prepare our balance sheet. Say that it has a T format. You have to understand the format of our balance sheet. So, watch this. You have to watch this. We are going to list our assets. Assets on this side. Then on the other hand, we are going to list capital plus liabilities. Then we underline assets, capital plus liabilities. We'll start with fixed assets. We underline fixed assets. These are assets that you cannot transform into cash within the next year. You cannot easily transform or convert into cash within the next year, or let's say next year. Examples are land and building. That is our first. Land and building is our first asset. Land and building is 650,000. On the first money column, you indicate 650,000. The second fixed asset here is motor van, 150,000. Motor van, 150,000. Then we have furniture. Furniture is not, you cannot easily convert it to cash in the next year. It's called fixed asset, 280,000. We have furniture. Then the total of our fixed asset will transfer to the next, to the second money column. Let's get total 650,000 plus 150,000 plus 280 plus 280,000. 1,080,000. So 1,080,000. 1,080,000. Then we move to current assets. Current assets easily converted to cash within next period. So we have stock for 470,000 stock. We have 470,000. We have debtors or accounts receivables. Sorry, we have debtors or accounts receivables as 35,000. 35,000 debtors stroke accounts receivable is 35,000. 35,000. Then we have another stationery is 250,000. Stationery 250,000. Stationery is 250,000. Then we have cash is 50,000. Cash is 50,000. Whatever we acquire here, we shall transfer it to the other side. Total of current assets 470,000 plus 35,000 plus 35,000 plus 250 plus 250,000 for stationery plus cash 50,000. We acquire 805,000. 805,000. Let's move to capital. We are done with this side as a side. Let's move to capital. Capital. We have not been provided with it, so we have to calculate our capital. And this is how we are going to calculate our capital. We have from the bookkeeping equation, assets equals capital plus liabilities. That's the bookkeeping equation. Assets equals to capital plus liabilities. So for us to calculate capital, we are going to make it the subject of our formula. We will make capital to be the subject of our formula. How? That's the question. How? And I am showing you. Just watch this. Watch this. How we are going to make capital the subject of our formula. This is a mathematical equation. So capital, making it the subject of our formula equals to assets minus liabilities. Our total assets is here 1,080,000 plus 805,000. 1,080,000 plus 805,000. 1,885,000. 1,885,000 minus our total liability. Our total liability. Our total liability, we have bank overdraft is a liability. So we calculate our total liability. Bank overdraft is current liability. We have bank overdraft is 80,000 plus 10-year bank loan, again is another liability, long-term liability, 500,000 plus creditors is a short-term liability, short-term or current, short-term liability, plus 240,000. That is creditors. Then another liability, 1-year bank loan. There is a short-term liability, 280,000. 1,100,000 or 1,100,000. So our capital here will be 1,885,000 minus 1,100,000. So you'll have 785,000 as our capital. So we are going to record our capital 785,000. We have capital as 785,000. We have calculated our capital, so we are done with this. This bookkeeping equation, we are done with it. So let's proceed. Capital, we've listed our capital as 785,000. So our capital is 785,000. That was our first question. The first question that was asked to determine capital, 785,000. 50,000. We calculated it there. So let's move to short-term liabilities. Short-term liabilities. Short-term liabilities, we underline. Then the first short-term liability is bank overdraft of 80,000. Bank overdraft 80,000 in the first money column, because we have like 4, so we want to sum them up, then transfer to the second money column. Bank overdraft 80,000. We have a 10-year bank loan. No, 10-year bank loan is a long-term liability, so we leave it for a moment. Creditors was it 50,000? Was it 50,000? Our creditors. Let's see. Land, stock, bank overdraft, debtors, 10-year bank loan. Yes, our creditors is 240,000. This one is our short-term liabilities. Creditors, 240,000. Then or accounts payables. Then another short-term liability, 1-year bank loan. It can be we can consider it as a short-term liability, 280,000. 1-year bank loan, 280,000. 1-year bank loan. You said that is how much? 280,000. 280,000. If we are done. Totals we transfer to the second money column. Let's calculate it. 80,000 plus 240,000. We add to 280,000. We acquire 600,000. One is 600,000. Then we move to long-term liabilities. Long-term liabilities. Long-term liabilities, we underline. Then we have only one long-term liability as 500,000. 500,000. 10-year bank loan. Bank loan. We just transfer it directly. It is 500,000. 500,000 because we have no other long-term liability, so we transfer it to the second money column. So we want to see whether our balance sheet is balanced. Let's check. This side, 1 million plus 805,000, 1,080,000. We add to 805,000 is 1 million. We want to balance it, and we find a line. We will find a line here where we are going to balance. Find a line, balance it, and we'll balance it at 1,885,000. 1,888,000. 1,885,000. Let's check the other side. The other side, we have 785,000. We add it to 600,000. Excuse me, 600,000. We add to 500,000. Get to 1,885,000. 1,885,000. And our balance sheet is balanced. Our balance sheet is balanced. It is in conformity with the bookkeeping equation or accounting equation, which says that all the assets listed on this side must equal or should equal capital plus liability on the other side. So it balances at 1,885,000. We are done with our balance sheet. Maybe any question? The lines is open. Take some water. We are done with the balance sheet as the second financial statement. We are done with the balance sheet as our second financial statement that we are preparing. So we are supposed to prepare cash flow statement. There is an important statement, we call it cash flow statements. Allow me to wrap this. Cash flow statement. Allow me to wrap these. We are done with it. We have prepared our balance sheet. So we have prepared two statements so far. We have prepared one trading profit and loss account. Then second financial statement, we have prepared the balance sheet. Then we have number 3 is cash flow statement is the next statement that we are to prepare. But in our context, in a high school context, no one will be asked to prepare cash flow statement, less in institutions of higher learning. But this one we will prepare later. For now, let us look at something different. I would like us to prepare what we call the cash book. Very important in accounting, in business, paper 2, the cash book. And again, there is an important book for recording purposes. Most companies that are dealing in receiving cash and bank transactions, the cash book is very, very important. So let's look at the cash book. First of all, let's look at its format. And before I say anything, I would like us to discuss this in our next discussion. We'll deliberate on the cash book in our next discussion. You've understood balance sheet, and that's the end of our discussion for today. Thank you, and may you understand the balance sheet as second financial statement as we focus on preparing the cash book. Thank you.